Good morning, traders. Welcome back to another live stream. Quick update on the daily chart. Price is now trading below and near this fair value gap right here, or imbalance. We are currently right at the Monday low, which I didn't want to see get violated. That's why we need to wait for confluences and what market wants to do. We have a potential market maker buy model forming. Right here you have the original consolidation, then you have another distribution here. We could see one more accumulation of new short orders pushing price lower into the big fair value gap or imbalance, and then we should see some smart money reversal type price action. I'm still bullish. Nothing has invalidated my bullish idea. As long as price doesn't close below the low end of the fair value gap, everything is fine. But I really didn't want to see a run below Monday's low. But we could see a run on sell side liquidity. And then today we could see some upside potential into the buy side liquidity, which was left open with yesterday's price action. The other two indices, let's take a quick look, have taken out their buy side liquidity. They both traded above the high. Even Nasdaq, the pair which didn't take, was very slowly moving during the AM session, took out the high, but S&P failed, so we have a bearish divergence. But also at the moment we have a bullish divergence. You can see that Dow Jones didn't run the low, S&P ran the low, and Nasdaq also ran the low. So use 30, our strongest pair today at the moment. We have no news impact drivers coming up for today. Yo, I hope you're doing great. This would be a potential bullish market structure shift. We have a intermediate term high, price filled in this imbalance. We could see a bullish market structure shift. Once we break this high, we have some equal highs resting above here. Mark this out. Maybe we could take a trade. I mean, I'm not risking personal funds today, probably because we have made such great profits during the last days. But I mean, of course, we can paper trade on this TradingView account. Now we broke the swing high. And market could form a fair value gap right here. Now let's take a quick look at the other indices on the lower time frames. Okay, so no fair value gap right here. Market closed it in. So no trade for at least for now. Maybe just price wants to run out the buy side liquidity and continue lower. I mean, we just have created equal lows right here. Probably retail is buying up right now, seeing this break of structure. But we just patiently wait. We're not in a rush to get anywhere. In the last 2 days on the live sessions, we made about like 5%, I think I said yesterday. I think 5% it was. Only in 2 days, so we're not in a rush. Okay. Market is expanding. We have this 15-minute fair value gap right here. Watch how it reacts to that. What did Nasdaq do? Nasdaq also didn't take out Monday's low. Just watch. I mean, it's a huge fair value gap right now. I mean, we have right now a clear market structure shift also on the 5-minute time frame. Yeah, we could take a trade. Stop. Could trade. Play it safe and put the stop 3982. 3982. I mean, I'm not entering on my personal funds. Let's write it out. Oh. Not risking any personal funds on this trade. Hopefully nobody comes in and takes this trade. I mean, we have, this is a breaker right now. Here you have a breaker. Market took out sell side liquidity, traded above. Let's see if it wants to rally higher. Again, not risking any personal funds on this trade. Hopefully this is clear. Take a look at the other indices. Nasdaq created more equal highs. US30, our strong pair, looks like it wants to press higher. Last if market gives up this order block. So again, as I said, market reacted out of this 15-minute fair value gap. We have a potential market maker buy model on the lower time frames. Right now, usually I don't really consider any market maker buy or sell models, but they're just a nice confluence. What do you think about highs and lows of the day formed during London lunch? So, I mean, your first question, the highs and lows during London are potential market could run for them and reverse. If you watch the ICT 2022 mentorship, then you know that you should watch out for London highs and lows, because there will be potential liquidity residing above or below the lows. So this is our last order block. That's why we have our stop below this swing low. It didn't really respect this order block, but you can see it never closed below it. Nasdaq could run for the low. Yeah, probably we will get one more run below the sell side. Let me make this a anchored note, anchored text. Copy. You could see market already violated the fair value gap, the breaker, and the order block. It violated 3 PD arrays. For safety reasons, we have our stop loss below this order block. And the second question was, for example, today on DXY, I expect bearish delivery tomorrow with the news. Should I anticipate a buy side liquidity grab above today's high because it's low resistance liquidity run and formed during London lunch? I don't even know at what time London lunch is, because but I will take a look just in a second. Just let's see how this plays out. US30 is trying to hold on against the bearish pressure, slowly trading higher. Okay, if market will probably expand aggressively to the downside now. If it closes inside the order block, we just take a partial loss, but again, not risking any personal funds on this trade after such a strong week. Okay, so it closed exactly at the body of the candle. US 30 is currently also inside its fair value gap. Last chance to rally. Also, if US 30 Dow Jones closes below the low of the fair value gap, likely we will see a run lower. Let's take a look at, yeah, I don't like the close. Close it with a partial loss. I think it was a, okay, what's that? I don't like the price action. It violated 3 PD arrays. Now it's likely to run lower. Let's take a look at DXY. Okay, so you expect bearish delivery tomorrow. Okay, with the news. And should I anticipate a buy side? And should you expect a liquidity grab or not above today's high? I mean, we're just forming an intermediate term high. You have a high here on the left, a high here, and another high right here. I don't know why you say it's a low resistance liquidity run. So, market, oh, aggressive delivery below the low. Now we need to watch how far it will rally. So this was another accumulation of new short orders to push price lower below the sell side liquidity. Now just monitor price. Right now we have also a divergence. What the fuck the leverage use? I think it's just for fun. I opened here a $1 million trading account. That's why 1% is like 10,000. It's paper trading, so so let's see if Dow Jones wants to rally lower, taking out this low from the fair value gap. Right here, nice short opportunity if price wants to rally lower. So let's see how far the market will trade lower today. I mean, right as we opened, market just plunged lower, consolidated. Then at the end of the London session, price dropped, consolidated. We opened, took out buy side liquidity. And now we have another run lower. If we're bearish, price should not trade again above this high. In 2 minutes, this 4-hour bearish candle will close. So we currently took out the sell side liquidity and are now trading inside this 4-hour fair value gap. I think right now it's 50%. Let's see. Just monitoring if price wants to trade lower. We have a fair value gap right here. Nasdaq also below the low. So Nasdaq, we have this daily order block. Probably I will wait until price trades into it. And of course this fair value gap, but I won't mark it out. Just mark out something smaller. Okay, so another reaction from this fair value gap. I mean, look at the run today already. Heavy push lower. Many retail traders probably trying to hop onto the down move. Okay, Nasdaq traded into the daily order block. Now we could see a reaction to the upside. Market reached a discount. PDRA on Nasdaq, we have the same. Market maker buy model. Down, down, down. And now we hit a higher time frame PDRA. And now just monitor price action, and if it wants to trade lower, higher, or if it wants to continue the bearish rally. So once price trades above this high, I wouldn't mark this out as a bullish market structure shift. So let's see. Let's look at other indices. Okay, ES. Once we close above this fair value gap, this becomes a balanced price range. Okay. But it also needs to close. That's what I want to see. We should see a close, definitely. Okay. I don't know if price wants to come down into this fair value gap, but this becomes now a balanced price range. BPR. I think we will get a fair value gap right here. I don't think it will retrace inside this area. And we could probably wait for another run. Okay, so as I said, as Nasdaq retraced into its discount PD array of this range, it's below 50%. Of course, price could just retrace into this 5-minute fair value gap and trade lower again. But our premise is bullish, so okay. Market will also likely not retrace into this fair value gap. Now, once price closes above it, we have another balanced price range, and that's what we did. Another balanced price range right here. And I anticipate a order block to form. Market could use also this balanced price range as an area of support. Excuse me. But I mean, it's a quick rally. Yeah, this could be a potential new long opportunity. Price below the third candle of the imbalance. 3971.25, 39. Okay. Okay. Also need to enter the risk. Let's see, I really don't want price coming so much lower. I would want to see a rally higher right now. I don't know how much I just put on. Yeah, it's around 2%. You could also put the stop loss above the candle body right here. Would be also fine. Let's see, if it wants to really rally, then it should do it now. Let's see which weekly. Maybe we have a volume imbalance in here somewhere which could support the idea. Okay, I don't see anything important or significant. Monthly chart. Okay. Scrolling through the different time frames. Okay, I would like to see a close above this 5-minute fair value gap. I really don't want to see a run. I don't want to see a run inside this fair value gap, this the balanced price range should, in the best case scenario, hold price from running lower. We have this wick and price could now expand higher. This would be perfect. Textbook. So this is also now become a balanced price range. And I would also, we need to outline the targets right now. Of course, I mean, technically we took a loss on this session, so our first goal is to make back the loss, or in first case 50% of it. These are just the areas for the partials which I outlined. I marked out all the buy side liquidity which is resting above the highs of each consolidation. And now let's see how far price wants to push lower. Okay. It didn't trade into this fair value gap. But I mean, it should expand higher. Let's look at other indices. Okay, so quite messy if you look on the 15-minute chart. Yeah, it's just trading inside this large fair value gap. I mean, we have no news coming out today. It reduces the probabilities of being right. So S&P 500 traded into the fair value gap. Traded really deep. Now we're trading inside this fair value gap. Like I said, I didn't want to see a retracement so deep. I really don't think this will hold anymore. So I mean, if we're really bullish, that's not the price action we want to see. And I think I already got stepped out, yeah. Didn't even notice the marks. So okay, if our stop loss would be just below this low, we would still be in the trade. But let's see, yeah. I mean, I don't care. We could trade lower again. Currently it's just up and down, up and down. Let's see if this is really a market maker buy model as we anticipated, or if it wants to just continue the move lower. I mean, I can really imagine at least a run above this and this high. How many traders went short on the retracements? But I mean, also in the last few days, with this crazy run higher, and probably we have some stop losses resting below the lows too. So Nasdaq has its sell side liquidity. Here you can see the equal lows. Okay, so somebody wrote I should check weekly candle wick. So which check week? Which week do you mean? Last week's candle or? Last week's low. Yeah, 1 second. Okay, so we're back from last week's low. Okay. Okay, and what should I see here? Check ES weekly candle wicks. I don't really know what you mean. So it's just chopping around. Could trade lower from this 5-minute up close candle. Yeah, I mean there will be better days. I don't know why I should stay on the stream. Tomorrow we have a nice day. Here's the economic calendar. At 8:30 we have high impact news with a lot of medium impact news following up. And then Friday is also probably a nice day. I think so. Tomorrow we will then stream at 10 a.m. I mean, this was a quick session. Price just consolidating. I mean, this retail pattern is quite profitable right now. The bear flag creates liquidity above all these highs for hopefully tomorrow or today's PM session, which I won't trade. Again, I think this will be it for the session. I mean, look at the range. It doesn't take out the highs, it doesn't take out the lows. Nothing to trade here, guys. I would recommend you to stay out of this marketplace. Just consolidating right here. I mean, I see nothing right now in this price action. Yesterday we had two beautiful opportunities. Sorry, not yesterday. The last 2 days we had beautiful opportunities to take a trade, and now there's no need to trade this choppy price action. I hope you enjoyed the stream. We will see us tomorrow and on Friday, and then we will end this live session week. Hopefully you enjoyed this far. And I would say we will see us tomorrow at 10 a.m. Stay safe, trade safe, bye.